Good afternoon and welcome to BizTech's ASEAN Midday Marketwatch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA. Good afternoon, Jeff. How are you today?
Good. Still struggling with this lighting, Brian, but I promise I'll get it sorted someday.
Well, no worries, mate. Let's take a quick look at the markets and see how markets across the region are performing. We start close to home with the SGX. It's at 3,209.74. It's up 0.15%. Bursa Malaysia is at 1,609.96. It's down 0.83%. But across the region, it's pretty much a sea of red. We've got 29,080.57 on the Nikkei. It's down 0.16%. Shanghai Composite is at 3,422.52. It's down 0.54%. The Hang Seng is at 28,910.50. It's down 0.15%. ASX 200 is down 0.33% at 7,022.40. And now rounding off the negativity is the Kospi at 3,209.65. It's down 0.24%. Jeff, what's the reason for this negative sentiment right now?
I actually think, Brian, it's investors taking money off the table ahead of the FOMC rate decision. So although we expect that the FOMC, whoopsie, and there goes my lighting. Sorry about that. There we go.
Sorry.
You couldn't make that one up. It also fell on the kitten who's asleep next door to me as well. So maybe we'll see Twinkle appear on the camera as well. Sorry. All right. So circling back to that again. Look, the FOMC, there's no one's really expecting any change in the language or the guidance, but it's a case of just in case. So I believe that investors are we're going to reduce some exposure into this meeting just in case they surprise the market. And if they were to surprise the market, that would probably mean that bond rates, yields would rise and equities would fall and the dollar would strengthen. So I believe this is the sort of flow that we're seeing today, just some risk reduction ahead of that event.
Now, Jeff, the whole global recovery narrative continues because China's industrial profits announced this morning jumped 92.3% from March last year. Now, admittedly, March last year was a low base, but it's nevertheless positive numbers, still outpacing a 20% gain, 20.1% gain in December. How should we read into this?
I believe it shows that China's economy is firing and its recovery itself is on track. I believe that the pace of those gains may be starting to slow, and some other economists around on the street are also expressing similar sentiments. We're going to have a much better idea on Friday with the non-manufacturing and manufacturing purchasing manager indexes that get released, and that will give us a better picture. But I think overall, very, very strong data, much like the United States, and it's great to see that the two most important economies in the world are either on a recovery track or are already firing on all cylinders.
Now, talk about on a recovery track and firing on all cylinders, it's HSBC. Now, HSBC is Europe's largest lender by assets. Now, it just reported its first quarter pre-tax profit that beat estimates, but overall revenue was down. So HSBC is interesting because it makes, while it's Europe's largest lender, it actually makes most of its revenue from Asia. Now, it reported before tax profit rose 79% from a year ago to 5.8 billion. Analyst expectations were only 3.34 billion. So again, back to the whole narrative of the Asia growth story and the global growth story panning out.
Yeah, definitely. And also steeper yield curves. So yield curves have steepened, and typically banks make more money when yield curves are steeper. That's simply because they lend money at over long term at higher rates and they fund it at low rates in the short term. So that's usually positive for banking. I believe there's still a bad debt component there or provisions therefore. But I do believe that HSBC will more and more start moving its business towards Asia. I think it's going to find it impossible to thread these political minefields of the US and Europe on one side and China on the other. And we've already seen some senior executives relocated to Hong Kong, and I think that trend will continue. I believe that HSBC feels that its future is Asia and not its traditional markets in the Northern Hemisphere.
Now, we've got to look at commodities, and we have to look at oil prices now, which are really strong. It's at the 60 mid 60s mark, has been for a while. What's your outlook for prices, especially given the COVID situation in India, and also the fact that there's been a steady reduction of inventories globally over the last few months? So that supply issue has essentially evaporated in the last couple of months.
Well, there's a couple of tests coming up here, Brian. Firstly, the OPEC Plus production increases start from the 1st of May, so next week. So it'll be interesting to see how the markets absorb that oil supply. But we can see that speculative interest, either short or long, has actually dropped off in both Brent crude and WTI of late. And I think part of that is because those markets are actually ranging. They're balancing out. We've got the global recovery story on one side. We've got those fears over COVID-19 and India in particular, the third largest importer of crude oil in the world, on the other. And we're seeing some of these COVID concerns spreading to other parts of Asia now as well. So these factors are sort of balancing each other out. And when we look at Brent crude, it's bouncing around in a very wide range between $64 and $68 a barrel. And my view is that's the noisy range we're going to see, and that a break of either of those two levels, 64 or $68 a barrel, that will signal oil's next directional move. And at the moment, though, things are sort of balanced finally one way and the other. So all we get is choppy range trading.
Now, so as you said, markets, all eyes on the FOMC meeting today and tomorrow. Any other key data points we should be watching out for?
Yeah, well, I was just looking off screen here when my actual window blocks went falling out of the window frames. Look, we've got a packed schedule. I mean, this is the busiest week of data that I've seen in quite a while, and it's hard to know where to start. So for your viewers, there's mainstream data every day this week. If I was to pick out some of the more prominent numbers, they would be obviously the FOMC. We have CPI in Australia. We have personal consumption and in the US on Friday, and GDP on Thursday. And then of course in China, we also have, as I said, those PMIs on Friday. But also when we look across Asia, there's some pretty important, we've got Malaysian balance of trade tomorrow. We've got inflation data out of Asia as well. So all in all, there's something for everybody this week, and that doesn't change next week either. But I think those are the big numbers to look at.
Now, thanks for your insights, Jeff.
Always a pleasure.
Now, we've been speaking to Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please subscribe and like our Facebook and LinkedIn pages. Thanks a lot for watching.